Happy Monday, traders, and welcome to another week in markets. A quick recap on Friday night, because Friday night was important. We got some US PCE inflation data out of the US, which is the Fed's preferred inflation gauge. Now, in August, the headline number came out at 2.5%. Market was looking for that to drop to 2.3%. It actually came out even softer than expected at 2.2%. The core number month on month, expecting 0.2, and that came out lower at 0.1%. So more progress is being made on inflation, and it obviously gives the Fed more room to continue to cut rates. So look, the market is certainly not worried about inflation in the US anymore, obviously, and at the moment we've got a market that is pricing in for the next Fed meeting, which is November, post that inflation positive inflation data, 50% chance that they will cut by 50 basis points and a 50% chance that they will cut by 25 basis points in November. So at the moment, market's looking at next Fed meeting as a coin flip on what they're going to do with rates. So what will actually skew those odds, to make either 50 basis points more favourable or 25 is what happens to the labour market now. And so if we see a deterioration in the labour market, obviously the market will start pricing in higher odds for 50 basis points. We do have non-farm payrolls on Friday at the end of this week. So we'll have to wait until the end of the week, I guess, to actually get some clear conviction exactly how this is going. But certainly, especially if you're trading currencies, this is important, because if they are going to be cutting and the odds for a 50 basis point cut increases, no doubt we will see the next wave of US dollar selling across the board. Okay, so the big news obviously all of last week was China, what was going on there with all the stimulus measures that China has been throwing at the economy, trying to lift the economy. And on the weekend, we actually saw even some more news out of China, where they've instructed the banks to lower their mortgage rates to basically the people who've got the mortgages by 0.3%. So the China stimulus keeps on coming. We've seen the Shanghai comp last week rally by 12%, which was the biggest rally that the Chinese markets have had since 2008 in a week. And that's obviously seen a lot of FOMO buying, especially by the locals. There's a lot of stories out of China over the weekend that the brokerage account openings have been going through the roof. And some brokerages are even been open almost 24 hours a day, just trying to facilitate, opening up all these new accounts. Okay, so today we do have some China data. We've got Chinese PMI manufacturing data, which is always important. Look, they have been in contractionary territory, sub 50. We're supposed to see a marginal increase in those manufacturing data today. But look, the stimulus measures at the moment won't, feed into, working the magic on those numbers and really lifting those numbers. Maybe we might see that in the months ahead. But look, China is open today. No doubt we're probably going to see another positive session, especially if we see that FOMO retail buying coming into the market now. But after today, we actually see China close for the rest of the week, because they are on the Golden Week holiday. So only one more day of China before it probably goes out to the news for the rest of the week. Look, a lot of the China trades obviously have been doing well. One we've been talking about a lot is the Aussie, because not only does it have the China stimulus behind it, but also has quite a lot of other good things working for it. Aussie is opening the week at the moment around 69.20. No doubt if we see a continuation of a bid in Chinese equity markets today, see more in the commodity rally, and equities remain buoyant across the board, Look, Aussie this week could make a run for 70 cents, that big psychological level. So, it's very hard to be selling Aussie at the moment. Other than that, the big news that we've had over the weekend is some more geopolitical issues in the Middle East. With the Israel bombing in Lebanon and killing the head of Hezbollah in Lebanon. So obviously we've seen an escalation in the war there. Look, markets at the moment seems to have been really not affected by any of what's been going on. Obviously equity markets have dipped momentarily on some of these headlines, but then we just see them come roaring back. Look, gold obviously has got a war premium built into it on the back of these risks. But the biggest risk, obviously, is if Iran ever gets involved. If we ever do see that getting closer, I think finally maybe equity markets won't ignore that. But look, at the moment, it's gold obviously is still well bid. We're opening here in Asia around 60 plus. The record highs were at 26.85 last week. So look, there's a good chance that short-term target we've been talking about a lot, up towards 2,700, is realistic, especially if we take out that 26.85 high. Anyway, look, I hope you have a great start to your week trading, and we'll check back in again soon.